Good afternoon, team. All right. Well, I'll be darned. Today, we're going to talk about a couple things. Mortgage rates getting better, buyers getting fatigued. How do you win in this market? You know, we've talked about appraisal bridge. We've talked about some of the specific things you can do, but really it's a mindset to win in this market. It's not easy. If you're a buyer trying to buy in this market, it is not easy. Inventory is very low. Sellers have their rule of the roost. It can still happen, though. It still happens. It's still possible. So we're going to look at rates. Also going to look at this, which is something that a lot of people have been talking about. And, some see it as a positive for, real estate owners. Some see it as a negative for just the overall quality of life for people who have been the most displaced. So we'll take a look at that too. And we'll just talk about, some of the things that we're doing to win, the right mindset to have. What happens now? Okay, here's the best news of the day. Best news of the day is mortgage rates finding a way to clearly close above this resistance level, which we've been talking about it for many days now. We touched it. We knocked on the door once, twice, 3 times, 4 times, and on the 5th time, it looked like, we broke through. Is the line perfect? Are we off in the line by a couple basis points? We're really still at resistance. Weren't sure yesterday. Today, we went down. We traded below this resistance level, and now have closed above it. So the 6th time is the charm. Mortgage bonds really wanting to go higher. And I'm as surprised as anyone, given the inflationary situation, given the information we've received from Warren Buffett and Janet Yellen just in the last 48 hours, just this week, which confirm significant inflation, that there would be anyone buying bonds. It could also be the case, I'm going to speculate with you here. And by the way, yesterday we were talking about stocks and investments, and we talk about Bitcoin and cryptocurrency sometimes and stuff like that. I'm not a financial advisor. I don't make any money advising anyone on finances. You do whatever you want. The main thing I wanted to say is that to wake up to it, look into it. Don't just one day go, oh my gosh. Well, if I had known we were experiencing massive hyperinflation, I wouldn't have kept $100,000 in savings. And what about property? I would have invested in something. So that's it. Just be aware of it. Do your own research. Talk to your financial advisor. But just know, that we are in the beginning of a hyperinflationary cycle, which could drive prices on everything way higher from here, including real estate, including cars, including Heinz ketchup. Talked about that. Warren Buffett, Berkshire Hathaway. They own Heinz. He's told us that they have to accept the price increases from their vendors. Therefore, they will be passing them on. And this is how the dominoes fall. So for now, we got great news for rates. Hey, how about it? Tomorrow, my guess is that we go ahead and come up here and test this guy. Very likely. I mean, we're in the middle of nothing here. There is clearly right now, mortgage bonds are very, very light, meaning they want to go higher. It's like a balloon with helium in it, just wants to go higher. And you can see that in the price action. And this is good because remember, when mortgage bonds go higher, which is what we're seeing in the price action right now, rates go lower. This drop that we've been seeing in mortgage bonds has caused rates to go up. So we're not quite back to where we were. This is the all-time high number right here. But look how much ground we've made up. A significant amount. Darn near, well, it's over 200 basis points now. Or it's got to be close to it if it's not over it. So a tremendous amount of ground has been made up just since, just in the last 6 weeks. This is all very good. All very good for mortgage rates. Really, really good. But what we're experiencing, what we're seeing is buyer fatigue. And perhaps, and we talked about if rates go up, that could be a killer. Rates went up and it didn't kill the market because buyer fatigue hadn't set in to the level that it has now. Buyer fatigue may become the new concern over the continued strength of the real estate market because there are plenty of qualified people. I got a whole list of them here. Plenty of people who are qualified out there writing offers, struggling to have success getting offers accepted, which is a difficult thing to do in a seller's market. It really is. But so we've talked about strategies for that. We've talked about different ways to remove contingencies, still have protection. We've talked about the appraisal bridge being the big deal. We've discussed different ways to accommodate the seller's needs. Sometimes it's extra time in the home. You can do up to 59 days free rent back if you want to. Typically the buyer needs to occupy on the 60th day, depending upon the loan program, but that's typically how it works. There's all these different ways that you can potentially make your offer more sexy, but still when you're up against 10, 20, 30 offers and you're doing this over and over and over, you're going to have some buyer fatigue. Buyer fatigue is probably the new number one concern I have for the real estate market, especially here in San Diego, where the competition is just absolutely nuts. We have people who are, putting 20, 30, even 40% down. And that doesn't mean that they're going to get their offer accepted. Even if they waive the appraisal contingency, they may still have to go through the same thing. It's hard to prepare someone for this. That's the trouble. You can tell someone, hey, the market's nuts. You're going to have to come in guns freaking blazing, or we have absolutely no chance. You can tell someone that. You can even watch them experience it once or twice. But on the 10th time, even the strongest willed people will have a hard time continuing. So buyer fatigue is an issue. And this is one of the reasons why I want to bring up mortgage rates, because one of the things we have to do collectively is inform and educate people about what's going on. Mortgage rates now have kind of a clean run for the next, what is this here? Not 100 basis points, but let's see, that's 4/112, and we're at right now. So another 25 basis points, pretty much free and clear. We could probably be up 25 basis points tomorrow. This is great for people who have locked, I've locked a lot of people in this window right here, between these different days. If we can get up and cross over this here and go and maybe test this level, some of those people are going to be looking at float down, which is a very rare thing to be able to do. But, you're going to be really, really close to it if not there. Above this guy, look at the distance between the all-time highs for mortgage bonds and the highest level of resistance here. It's over 100 basis points. So we really only have a couple of hurdles right in front of us here. They're big ones, though. 100-day moving average, 200-day moving average. But if we can hop, skip, and jump over those guys, maybe we do. Maybe we do make it all the way back. I think that was my best case scenario prediction, that we would make it all the way back, 100% return back to the all-time lows for mortgage rates. Either way, this is something that we need to make people aware of right now. As competition is heating up, as buyer fatigue is piling up, we need to let people know that rates are in great shape, and that they're much, much better than they were just 6 weeks ago. Now, that doesn't mean that everyone's getting a great rate. If you have lower credit scores, lower down payment or whatever, maybe you're not getting as great a rate, but you're in the threes, probably the low threes. If you're FHA, conventional rates, same thing, at least, in the low threes, to mid threes maybe. And VA, you're in the twos, high twos to mid twos. Those are all really, really, really good rates. Now, people have been excited about mortgage rates for a long time, though, because rates have been good for so long. So it's not necessarily new news. In fact, some people who've been shopping and getting buyer's fatigue, they didn't even know that rates went up, or they didn't really understand that rates went up, even though they may have been informed what that effect would have. So now the fact that rates have come back down isn't that much of a selling point for them. So what do we talk about here to help encourage people to make a smart long-term financial decision if they are experiencing fatigue? This is where we have to talk about the three main things. I'm going to get to this eviction ban next. The three main things when you own real estate that you do not get when you rent. You must own some form of real estate. You have to in order to get these things. That is the tax deductions, right? The opportunity to write off some of your housing expenses, the opportunity for appreciation, for it to go up in value, and then, of course, the equity pay down every month. You're not just paying a bill, you're paying yourself. A chunk of that mortgage payment that you make goes to you. Okay, it goes into the equity in your home. It pays down the balance, which means it goes to you. It may feel like, well, I'm sending this off to the bank. You are, but you owe the bank money. So you're chopping away at that, which means that is creating equity for you. So we get zero on all three of those fronts when we rent. And some people, like the people who are taking breathers right now, they're saying things like, I'm just going to take a year off. I'm going to sign a lease and forget about this housing market. and I'll just see where things are in a year. That's how over it they are. Best thing you can do if someone says that is say, hey, listen, sign a shorter term lease. Don't do a year. Do a 6 month. Do a month to month if you can, and just keep looking. Keep looking. You doesn't mean you have to write offers, but keep an eye on things. Because when the market starts to soften, it doesn't necessarily do it all at once. Remember, this isn't a linear thing. If the market does soften, there will be a deal here, a deal there, a desperate seller here, motivated seller there. It'll be here and there, and you still are going to have to be on top of it. You can't go on a vacation and expect to get a deal. There's too many people who are going to be paying attention. So if you want a deal, set yourself up for success. Okay, hey, I get it. You're fatigued. Do a short-term rental. Do a month-to-month lease somewhere. Put yourself in a position where you can be mobile. Okay, if you really want to buy a place, something you're going to own for decades, this is a worthwhile sacrifice, isn't it? You're going to make a multi-$100,000 investment for which you plan to own for multiple decades, most likely, hopefully. It's okay to put yourself in a little bit of a pickle, okay, in a month-to-month rental, or maybe living with parents, or maybe living with a friend for a little while. Put yourself in a good position. A lot of times people are getting fatigued because they put themselves in positions where that's the only thing that could happen. Either they're going to get a house or they're going to get sick of it. They had a gun to their head. Our lease ends by this date. We have to be out here, or we've got to be somewhere by this date. That's a tough spot to be in. Set yourself up for more successful position and work on some of those things to give you some more timing flexibility. That would be my suggestion for people who are starting to get fatigued. Talk to them about it. Say, listen, it's okay. I get it. You need to take a month or two off. Okay. Let's continue to look. Let's continue to watch the market. Let's continue to see what happens, because what if the perfect house hits the market and I know the listing agent and your agent knows the listing agent and you just signed a 1-year lease and rates are low? Then what? Then you absolutely just blew it. No! You blew it. Why? Just because you didn't set yourself up for success. You put your success on hope, on luck. Am I going to get the exact right house at the exact right time in the next few weeks or months? And if that doesn't happen, I'm going off the cliff. Don't do that. Put a ramp up there. Give yourself a chance to maneuver and to be in a better position for success. By the way, we're live right now, so say what's up if you want to. Federal judge overturns the national ban on evictions. And so this judge basically struck down the national eviction moratorium, potentially leaving millions of Americans at risk of losing their homes. Let me just tell you from a standpoint of let's look at the landlord standpoint first. Okay, they've definitely had to take it on the chin here in a lot of different ways. I mean, think about this: if you're a landlord, you own a piece of property, your tenant calls you and says, "I can't make the payment. I'm sorry. I got laid off. COVID." You go, "Okay, that sucks." Now, what do you have to do? You own the mortgage, or the mortgage is your responsibility. So you have to then call the bank and say, "Hey, forbearance. Now that's messing up your credit. It could mess up your whole life. I mean, if you need your credit for anything, it could mess up everything that you're trying to do." So landlords have given a lot. It definitely sucks. I don't think that the government should ever be able to do this, should ever be able to say you can't evict someone. If the government wants to take that burden on themselves and say, "Hey, we'll pay your rent," then that's one thing. Okay, I disagree with that as well, but that makes more sense to me than telling landlords, "Hey, sorry, bad news, guys. But here's the good news. You can do forbearance," which is always a scam. Loan modification, forbearance, whatever they name it, whatever they dress it up as, it's a scam. All they're trying to do is make sure that you get completely committed to them. So you sign up for the forbearance. Oh, now you can't refi for a certain amount of time. Right? So they have you, and then they're adding more on to the end of the loan so they can make more compound interest on that paper. Sorry, it's simple interest, but it compounds their return. So it's always a scam. All of that stuff always is. There's a few people I've talked to in my entire lifetime covering this, and I was on the radio every day. It was a daily radio show during the financial collapse I talked to so many people who had loan mods. Almost everyone, 99.9% of people were screwed by them. There's a very small few people who I couldn't believe the deal got. I think that banks just screwed up and gave them a great deal on accident. And once it was signed, it was done. So key points here. Housing advocates have said that the national ban is necessary to stave off an unprecedented displacement of Americans, which could worsen the coronavirus pandemic just as the country is turning a corner. I don't think you're going to see, tons of homeless people from this. Okay, well, now people are going to be evicted that are going to become homeless. I don't think you're going to see a ton of that. But I don't know. But this is a part of just a free market, though. Even if we didn't have coronavirus, there would be people who are getting evicted, and some of them may be becoming homeless. Sad. It sucks. And I wish there was a solution for it. I really do. But it's just the way it is. If you can't pay your bill, then you got to go. That's the way it works with everything. Why not real estate? So property owners have criticized the policy and say landlords can't afford to continue housing people for free. And that's true. Why does the property owner have to bear the burden? That just doesn't make sense to me. And so here we go. The lift on it has taken place. Will this create more inventory? That's a very good question. And, if it does create more inventory, which is exactly what we need. What's up, Matt? See, we can pull your comments up live right here. Say hi. Come in and say what's up if you're in here. What's up, Matt? How you doing, man? Matt is the man. So, will this create more inventory? Inventory would be good. If, some of these landlords are like, you know what, hell with this. And that was one of the things that we talked about in a recent event that we did was, a lot of landlords over the past year have decided they don't want to be landlords anymore because it's been very, very hard to be a landlord. Very, very hard. You've had to deal with forbearance, people not being able to pay rent, COVID, all sorts of crazy things. A lot of people who own rental properties right now, as soon as they can sell it, they will be. Because they're like, this is not for me. It's not what I thought it would be. I'm done. That's going to happen for a lot of people. Now, will that create inventory in San Diego? It could. I think around the country, it most definitely will. But will it be a lot of inventory? Will we get a lot of inventory from this? Probably not. Probably not a ton. But, some is better than none. What we need right now for balance in the real estate market nationwide is inventory. It's very, very difficult to find it. It's very, very difficult to just drum it up. We have, millions of realtors who are out there making cold calls, trying to drum up inventory every single day. Listen, we've got a huge sales force trying to figure it out, trying to make it happen. But that doesn't mean that it's easy. It means it's actually kind of the opposite. That's us. Let's get to some stuff here. What's up, Ethan? How you doing, my man? Would landlords then have to make the tenants pay back the rent if they went in forbearance? Oh, good question, man. I don't think so. And the reason is because the forbearance and the evictions were banned. So the landlords didn't have the option anymore. So landlord couldn't have evicted you. So they wouldn't be able to go take someone to court and say, well, if we would have been able to evict you, then we wouldn't have had all these costs. And therefore, you owe the rent back. No. But it's possible, depending upon how I'm not an attorney, so definitely talk to an attorney about this one. It's possible that you could make the case that, okay, well, now that the eviction ban is behind us, we're not going to evict you, but we want you to get on a payment plan to pay back the rent that has been lost over time. That is something that I think will probably happen. Good question, Ethan. I thought for sure your question was going to be about Dogecoin. Yeah, agreed. We need the inventory. Think about how many buyers there are in San Diego right now. If you just had like 25% more inventory, I feel really bad for the picky buyers who are like, yeah, we know exactly what we want. We want to be in Carlsbad Village. We want this many bedrooms and bathrooms. We want a view of this. We want this price range. Good luck. Good luck to anyone who's that specific. I mean, I will genuinely pray for you. It's going to take that. It's okay to have specific needs. It's okay to know what you want, but you got to be realistic about how long may it take. How long will it take if we are in a situation where we know exactly what we want, but this market doesn't change, this inventory doesn't change. So if you're a part of the sales force, if you are a real estate agent, this is something to contact landlords, see how they're feeling about it, see how they're feeling about their properties. Would they want to create some inventory? Would they want to go ahead and take advantage of a good seller's market, sell their property? A very, very good chance that some of them will, based on the last year and a half they've had as a landlord. Last year, let's say, hasn't been pretty. Some of them may be in situations too where raising the cash would be helpful for them. Also, when they pay that loan off, here's an important note to make. If they sell that home and pay off that loan that had the forbearance on it, put it as a zero balance, that will also clean up that whole aspect of their credit. So it'll eliminate the negative narrative. It'll eliminate the account. It'll pay off the account, provide a zero balance for the account that had the negative narrative. It'll be good. It'll be good for them. Be a good thing to do. Now, it's also good to go ahead and get caught up so that the word forbearance, that negative narrative, leaves your credit report. But just keep that in mind. If you're coaching people through that process, there are some benefits to it beyond just cashing in on a good seller's market and getting out of your landlord duties. You will see, a nice cleanup of the credit at the same time. So I think we're going to see some sellers for sure who own rental properties go ahead and maybe at least threaten the eviction so they can get someone out of there. I mean, they're going to be sending this article. This literally is just like it should be a copy paste in this article. Hey, here you go. This is the new deal, and that should get some of the tenants who've been difficult to deal with moving a little bit quicker. Either way, we need inventory for buyers. We don't have it, so we have to coach buyers on how to set themselves up for success. Persistence is the key to winning in this market. Do everything. Appraisal bridge, everything you can. Appraisal bridge, the letters, the follow-up, accommodate the sellers any way possible. Everything that you can think of. Throw the kitchen sink at it. It's not just about your best offer either. It's about the appraisal bridge and the confidence that the seller's agent has in you and your team, but also know the reality. Know that we're going to go and we're going to have several bidding wars. We're probably going to lose some. And then at some point, we've had a couple of contracts that have gotten accepted in the last week, which you would have never thought possible in this market. And sometimes just the moon and stars align. But you can't have good luck if you're not in the game. You can't have good luck if you don't take shots. So take shots, put yourself in a position for success. If your timeline ran out and you're thinking, all right, I'm just going to go sign a lease, get a month-to-month lease, get a short-term lease. Try to do something like that. Be a house sitter for one of these luxury homes. They hardly have to pay any rent. Do something so that you can put yourself in a month-to-month scenario and you can still be, flexible, agile, and keep an eye on this real estate market. That's the thing to do. Don't go sign a year lease. You're going to miss an opportunity. Something's going to come on the market. You're going to happen to glance and see it, and you're going to go, oh, already seen that happen. So stay flexible, stay persistent, and let's win it, team. Have a great day. Share this video with your friends if you want to make them smarter than everyone else. I'll see you soon.